Okay.
Hey guys, welcome to another short video here from peffsdaytrading.com. Last week we went over some of our basic charting patterns that we use on a day-to-day basis. And today we were kind of going to add on to that. We're going to use the charting patterns and talk how volume influence those charts. So anything that we're playing on a day trading basis has to have volume. I like it to have volume and news. One of the main rules that anybody will teach you guys is that volume is going to precede price. So if the volume is there, normally the price will follow it later. So in the morning, what I'm looking for out of a runner or something to get into is the fact that volume exists. The stock may be going down even, but today we had a really good example of a stock that had volume early, and we were able to take advantage of it in our trading room. So this is VTVT, which is a therapeutics company. Biotech was got some FDA approval this morning, so good news there. I'm on a cheap stock. So we see this initial move from a low of 250 to 322 right away in the morning. This is on low volume on the news, but as soon as 9:30 hits, we see a candlestick here, and this is a 5-minute candlestick in which it almost got 1.5 million in volume. So that's a great indicator early that, the traders are there and we've got a chance for it to go. And as you guys can see right off the bat, we have this awesome climb here, just basically almost runs a parabolic curve straight up as the volume is increasing. So for us to have runners and for us to drive price, we've got to have that volume. So awesome move here over basically a 25-30 minute time period. You see your volume increase from 1.5 million to push up to over 8.5 million in just a 5-minute period. So I've noticed this early on. Obviously, a lot of times you're not going to encompass this straight up move early, but it does give our eyes something to watch at that time. So then we're going to start looking for some of our patterns that we discussed the other day. So here's another example where we talked about a flag pattern. That was one of the things we discussed often in our last chat. And you'll see this flag sets up here really easy. As volume decreases, we get here what they call volume divergence. So as we see this volume going down, flag patterns created. So you're looking for that volume to precede that previous volume bar. So once this bar here breaks over this previous one, it's a good indicator that we're going to get somewhat of a run out of this. So that one was a really good one to make some scalp plays on early on, but definitely one I was going to keep my eye on all day. So then, once we get a little further into the day, we start looking at a larger trend here. So once we get this initial breakout off this flag, I'm going to start drawing my trend lines here, and we can see that bottom keeps holding. So this lower trend line coming off the bottom of these stocks here. So look at these candlesticks. They're not coming underneath my trend line there. And even if you want to go back further here and put it on a little bit more of an angle and do it that way, that'll keep your stop losses a little tighter on your entry and exit. So again, like we're drawing patterns here with these charts, we've got another flag here. This was one I caught for some decent money. Another one we discussed, symmetrical triangle play here. You can go all the way back from these previous candlesticks to see that it's holding this lower trend line. We get a flag play here. So we get our pop, bottom holds. We get a hammer candle, which is the most bullish candlestick we can get right there. And then we get an absolute rip out of this. Now we asked this time, how do we know that volume is going to come in? Well, the same way that you can draw these lines here on your candlesticks, you can draw them here with your volume. So if we want to start drawing this down, where we start to see some of the taller candlesticks here, we're going to draw it off the top of it. As soon as we get that break, again, volume divergence, we've got more buys coming in here. So obviously, good candlestick for any traders to see. Got a hammer candle. Next candle, you immediately see this influx of buys come in and drive this stock up. So good spot to use here. We keep drawing your lower trend line. You can keep above it. And you can obviously should scale some off as this goes up. So on this pop, say you bought 2,000 shares, maybe sell 1,000 here, ride this out a little bit. You see another pop, sell 500. Then as this starts to pull back and breaks your lower trend line, use that as your stop. But you'll see after these pops here, we don't get any more volume divergence. This volume doesn't get stronger. So the largest candlestick we have is red here. So that's a pretty good predictor that, you know, things are going to either start to break down or not hold. So throughout the day, we kind of see this move sideways. Volume's a little lower here. Nothing to, you know, draw on or, you know, make a play on here. Nothing I'd be playing at this point. Even where it goes to high a day here, we do see a spike in volume, but this is not something I would play, because if you look at these candlesticks, you've got green, you know, where there's buys, and then reds that are the same height or greater contradicting it. So this is a pretty good indicator on this volume that you're going to start to get some more selling coming in here, since it didn't have a strong breakout here. And again, you can draw your line at your almost previous high and can see that that became a pretty strong resistance throughout the day, and it was unable to break over that the rest of the day. So with that larger selling volume here, you do see the stock sell off throughout the rest of the day and fade down. So that was VTVT today. Made some good opportunities on volume and charting to make, you know, a few good plays early in the morning. Definitely some money opportunities there. Market's been a little slow, so it was really nice to see one hold like that. Yesterday also gave us a pretty good opportunity. I'll be the first to tell you the good opportunity that I missed. But we can look over here at ATNF. So if we zoom in on this a little bit, we check the volume on it as well. Again, volume precedes price. So this is a $10 stock. So you're probably not going to see the 2.5 to 8 million in volume that you're going to see on a $2 or $3 stock that we saw with VTVT. But again, in the morning, you've got some decent early buys. Nothing special that caught my attention at this point. It was after this initial pullback and this pop where it started to kind of garner my attention. You start pushing 500,000 in volume, you know, over $10. That's pretty tough for a stock to do. So at that point, you know, I was watching, I was drawing trend lines with the market being slower. Just sometimes I just draw my trend lines to learn. But then we did see a really nice double bottom setup in which we could still use a descending wedge to make a charting pattern here. So we've got our double bottom. So here $11 is holding very well. Good signs the stock's healthy. You still have strong volume throughout. Large selling volume after the initial pop early. Kind of expected with these higher dollar ones with a larger float. But again, draw your trend lines down through here, and you can see when that breaks above it, what occurs. So we've got our double bottom, and then again, we can draw our trend lines with volume. So we can do this the first time, and you're going to draw it down through what touches the most tops there. So we can draw that initially, that down through there, and then we see this volume break up. So it holds 11, you know, multiple candles in a row for over 10 minutes. This is a 2-minute chart. And once it does that, again, we get volume divergence where you have many buyers rushing in and flooding it. And we see a very nice pop over this little resistance point here in the 1130s as it pushes up to 1170. And if you're drawing your trend line down off those, you can see that as long as it's going to play in this area, the stock's still healthy and doing well. So again, we can start redrawing this trend. So we've got our double bottom, instantly pops off of that. So that was a really good sign to see again. Same support held. Another push back up here, and we can draw our trend line again down through here. And again, we see this volume divergence here, which you have this large candlestick back up. So another good play there. So this one presented multiple opportunities. So your initial curl, you've got your pullback off a double bottom, and then your break of your descending wedge. So another, you know, really common charting pattern that we use day to day in Peff's day trading in our Discord that we do alert these calls. But this one was really neat because it offered us two of my favorite charting plays here. So we get our double bottom, but at the same time, after this double bottom, I continued to watch it, and this was where I was able to make a little bit of money on it, just to say I played it. but we get this pattern again, get a nice flag down here. So now we have our cup and our handle created. So that's a very, very bullish pattern. Good sign that the stock is healthy, holding up and going to push to higher highs. So basically just two descending wedges here. So again, we can see this in the volume. We get our spike here, get a bit of a pullback. And again, if we push it down through from here, go up through there, again, volume divergence sends us to a higher high. So this is why it's really important that you get in and out of stocks that do have volume with them. It's very hard to get out of a stock that is, you know, trading 1,000 or 2,000 shares on a minute or 2 minute, you know, ticker window. So if you don't have the liquidity to get in and out, your chances of a greater fall on a pullback is much higher. And we want to limit our risk as much as possible with good profit potential. But these spots here where I'm showing on the volume and with the charting patterns offered very easy, you know, exit points had the stock broken down. So these were pretty safe plays. It was good to see some momentum come back in the market. But as you guys can see, the way volume affects price, and it can affect price going down as well. And I think if you look here at ATNF's breakdown, this is kind of where the market makers and larger companies can trick people. So you get this run up and people start seeing this, you know, there's another flag, right? Well, this stock's already pushed up and it's basically failing here at its previous high. You've got a little bit of break above it, but not with much conviction. So this large candlestick here where you get over 1 million in volume in a 2-minute window, and it only pushes it about 20 to 30 cents and then fails to break out any further, really good indicator excuse me, that you're going to get a volume divergence red in the wrong direction, which created this large, what we call a kill candle, which pretty much hurt the stock until much, much later in the day. But that's a quick breakdown, basically on 2 minutes and 5-minute charting of what I'm looking for as far as it, you know, goes with volume and in combination with charting plays. Very simple stuff. Like I said, you don't have to be a master at multiple of them. If you can pick out 1 or 2 style of charting plays and learn how volume will play in those, you can be very successful at stock trading. And speaking of successful stock traders, I'm going to pass it over to Brian Edwards, also known in our Discord as Fast MF Eddie. He does quite well playing these on a larger scale as well.
Hey guys, I won't take up too much of your time. As Chaz was explaining, volume is extremely important, and what I want to do is kind of run why volume is important. The reason stocks go up or they go down is based on whether somebody is willing to buy it or sell that stock, right? So it's just like with anything, something is only worth what someone's willing to pay for it. So you can see basically what, where's your, oh, touchpad. So even just looking at some of these charts where Chaz was showing here, when you get these descending triangles like that, that's called consolidation. So basically what's happened is the stock has gone up, people have started investing in that stock, and at some point you get people, it goes up enough to where then you start to get some sell-off. Well, everyone that invested, when you look at some of these volumes, like right in here on this candlestick, is in this range, right? There's some pretty big volume there. They're in this range. They don't want to sell it for a tiny gain. They want to make a little bit of money on it. So that's where kind of your resistance gets created right down here. If it ever drops below that resistance, that's where you get, yeah, so that's your support. That creates, sorry, that creates your support. I'm sorry. That creates your support down here. If you ever get to the points where it drops below that support, sometimes you'll see like what happened over here with this big candlestick, because you had all these people that were investing kind of right along here. And then it hit a peak up here where it had some massive resistance and they wanted to cut their losses. And then you get these huge red candlesticks like this down because it's everybody getting out to either cut their losses or to leave it with smaller profits. So really the key to it is understanding what drives people to want to pay for something, right? So there's a lot of different catalysts that can create that. a lot of times you look at potential news. If you look at hot stocks like um, you had NIO and you had CCIV. Those had a lot of momentum because of social media. Basically, look at any of the Reddit stocks right now. There's a lot of people posting about it, a lot of people seeing those posts as it's going up. It's gaining momentum up. So social media can drive that. News can drive it. Earnings reports can drive it. You always have to be careful and understand that there are market manipulators out there who can manipulate the market. So set your stops and kind of understand what that looks like, and then always look left. Um, by looking left on your charts, no matter what time range you're looking at, I like to look as far back as I can, or that makes sense. But you can really find a lot of your support to the left to understand where people might have got in and they're holding, or if you see some big volume candlesticks far to the left, you can understand kind of where somebody's at. And then that creates support, especially with some of your larger market manipulators and hedge funds and things like that. So really understanding what causes someone to want to buy a stock is really important, because that will stimulate volume, and then volume will stimulate price.
Beautiful. That was very well put, and something that we should all, kind of strive to understand within the stock market. That as much as the charting patterns and stuff play for us, human psychology is just as much of a larger part of it. So that's a lot of times where you see people say, don't chase a stock up or get that fear of missing out. That can get people burned a lot sometimes. That's why, in our room, we're not looking for the next GameStop. If you're trying to get into peffsdaytrading.com here with either just a premium membership, which is who we'll do these videos for in the long run, or just a standard membership, that's not what we're trying to do. I'm trying to provide something here that can be sustainable on a day-to-day basis. And that's kind of what our group is. And I think Brian made some great points there. If you guys do have any questions, please feel free to email them to peff@peffsdaytrading.com, or message me on Facebook, Instagram, wherever you can get a hold of me. I'm happy to help. Hope people can join in this and have as much fun and enjoy it as much as I do. But if not, we are recording this, so please share this with your friends if you need to look back for reminders, and then we'll have another video next week. So I appreciate everybody's time, and thank you for coming.